Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is November 24th, 2024. And this is a special episode of the daily Bitcoin update. I'm going to briefly talk about Bitcoin as per usual, but I'm going to spend the most time on the Ethereum chart. Okay, I'm going to give a special ETH analysis. Okay, and I don't typically do this, but I think it's important, especially at this time. We're literally just about to come into the bull market. As I said before, and people thought I was just saying it, the bull market in earnest hasn't started until we perform retests. And from what I'm seeing, one of the first assets, major assets that's going to perform the retest, and I'm going to show you the retest I'm talking about, is Ethereum. So we're going to go into the ETH chart. We're going to look at exactly where we think the price will come down to for the ETH bull run to start. A lot of people misunderstand the mechanics of the price action and saying, oh, ETH is dead, it's a shit coin, whatever. They have no idea what's coming. It's going to be one of the first movers. But this first drawdown has to happen. And the market is currently, as we speak, breaking down as we said it would. All right, now we're on the 4-hourly time frame looking at Bitcoin. And what we can see is quite clear on the charts. We have the makings of a rounded top. Okay, and if you look at price action enough, you come to a few conclusions, and one of those is that extremities, tops and bottoms, tend to be rounded. So when you see rounded structures, rounded features in price action, it typically means that price is exhausted and it's not likely to break up and out from that area. Okay, so we have currently a high of 99K in Bitcoin. I don't think it's going to 100K for a few reasons I talked about in last video if you haven't caught it, and I gave a few examples as to why 100K was staunch resistance, both psychologically and monetarily and structurally. So we're likely to break down from here, and this breakdown is likely to go a lot further down than most people think, because most people have it in their minds that this run from 70K around here to 100K is the start of the actual bull market impulse. It's not. It's a breakout of a high time frame resistance, and you can see this very clearly if you go on the weekly time frame, and you can see right here. Okay, I'm going to show you two really quick things. One, this is 7 months worth of price action right here. Okay, this is an inverse head and shoulders or bullish reversal pattern. That's 7 months of 7 months of resistance right here. Breakout. Typically you retest. 7 months is quite a long time, so that would require a retest of the breakout. Breakout was here, right, in early of November, right? So November 4th. So the retest comes down. So basically you go all the way up and you come all the way back down. That's typically how it works, right? Even more than that, though, if you really zoom out, you can see that this level of 70 to 71K isn't just the neckline of the 7 month sort of pattern, inverse head and shoulders pattern that we were in. This 7 month inverse head and shoulders pattern is just the right shoulder, we call it, of larger inverse head and shoulders, a larger bullish reversal pattern that's been in play, or that's been in the makings for 4 years. As you can see, this started in March of 21, so about 4 years, yeah, a little more than 4 years. This is your left shoulder, this is your head, this was the bottom right here. So you have this massive inverse head and shoulders, this legendary neckline of 70 to 71K, right? And that is coming down more likely than not back down here to retest. And after that, you hit your first wave to 120, 150, something like that, right? And we can talk about that later. But that would just be the first wave. People don't understand. You go from 99 down to 70, but then you rock it up. Wait, you clean cut butter like a knife through butter through 100K. Your next target is between 120, 150, 180. We can be more specific. We could talk about that later. It's probably going to be the target of the inverse head and shoulders height there. So it's probably going to be 150 or something like that. I don't know. It doesn't matter. Any case, let's not get too excited about that. But the target's going to be way beyond 100K, okay? And it's going to happen so fast. And people are going to realize, oh, this is what bullish price action looks like. You know, you haven't seen it in a long time. You haven't seen it in 4+ years. So you forget. You think the chop up is bullish price action. No, it's higher highs and higher lows. But it's not bullish price action. This isn't bullish bull market price action. It's bullish in that it's higher highs and higher lows, but that's about it. So that's my take on Bitcoin. Be very, very careful in the small time frame, because 70 to 71K is a high probability target, okay? And most crypto, YouTube, X, Twitter, whatever you want to call it, influencers are telling you just to buy the top. Be super careful, because what's going to happen is this. The market has so much liquidity here from people thinking that we're going much higher and not coming back down. All these stops, it's going to be a cascade of liquidations to the downside. The market's going to take all of this back, a lot of it back, especially the leverage. And then only the wiser, the more seasoned traders are going to have any ammo left when we get to this level. I guarantee you, I've seen it so many times. People have no money left when it gets back to support. Don't be one of those people. All right, that's enough for Bitcoin. All right, so just be careful in the immediate short term, going much lower than people think. Target is 70 to 71K, but as you can see here, don't be surprised if we do it in waves where you get an intermittent or intermediate bounce at around 81 and you pop back up into the 90s. It's not over yet, okay? That's my sense on Bitcoin. Now Ethereum, okay? And what I'm going to do for Ethereum, this is part of something I'm offering now. I did used to do individual altcoin analyses on my Buy Me a Coffee website, okay? And I offer that for like a few bucks a month. And you could pretty much subscribe and get an altcoin analysis done, and I send it to you within 24 to 72 hours or something like that. But I've discontinued that service because now that we're entering the bull market, I'm getting more requests and people want to talk about the entire portfolio. So I've come up with a new offering. It's on my Buy Me a Coffee website, and it is still a monthly subscription, but you can just do 1 month if you just want to do 1 month. But I think it's like $150 for up to 5 assets. So I analyze 5 assets. And first, we look at the viability, the fundamentals, look at the technicals. Is your portfolio balanced? Now, where should you be entering these trades if you're trading? And where should you look for high time frame high time frame sell points or high time frame resistances if you wish to sell. Not everybody does. Some people just want to buy and hold. But it's an hour to 2 hours every month, and we can check in every month, check in on targets every month, do something like that. That's $150 on my Buy Me a Coffee website. That's a new offering. So I'm no longer offering the unique single altcoin analysis. For that reason, I want to give people my altcoin analysis for Ethereum, because Ethereum is the king of altcoins. And at the very least, if you know what Ethereum's doing, you may be able to understand what the rest of the altcoin market's doing, more or less. Obviously, every altcoin is going to be different, and you're going to have some moving early, some moving late. So it's but just to get a general sense of what the market's doing. So let's start on the weekly time frame. Let's zoom out so you understand. Obviously, there's no need to talk about the fundamentals of Ethereum. They're bulletproof. This is sound money. It's deflationary. It is the decentralized computer, right? It's one of the best assets in crypto. It's A1 rated, Bitcoin and Ethereum, and I think recently Cardano has been A1 rated. But other than those three, they're fundamentally, there's nothing close. Now, we look at this declension in the bear market. We came down, and then we went sideways. Okay, so again, as I say, bear markets are comprised of a drawdown and a sideways consolidation or accumulation. That is the bear market. So you can see that you have this impulse down here, and then you had a very bullish triangle consolidation. I think we saw one of these in 2 episodes ago. I forget what asset, but it's essentially a sideways consolidation that's so bullish that it forms into an ascending triangle, which pops up, right? And so this is the very important resistance right here of this ascending triangle that was broken and retested. Again, the principles are consistent. If you break high time frame resistance, which this is, you have to retest it as support before moving forward. Okay, so Ethereum did that right here, and after retesting it, it had to consolidate anew, and that was this consolidation. So what you're seeing here is the first break up and break out of the Ethereum bull market. It already happened, and that took place approximately 3 weeks ago, almost exactly 3 weeks ago. So that's the story on the high time frame for Ethereum. Now let's zoom into the lower time frame. Let's look at that part that I said, the beginning of the Ethereum bull market. Okay, so you had this consolidation that bottomed out in August, and you can see this across the altcoin scene. And you had a sideways consolidation and accumulation of sorts that broke out. Okay, again, it's time frame agnostic, meaning it doesn't matter what time frame you're looking at. These principles are consistent. So this August channel of accumulation is what? Almost 3 months old. Okay, almost exactly 3 months old. What you have to do after breaking out of a 3-month resistance, which you did right here in early November, is retest it as support before continuing. That principle is consistent. Again, I'm not making anything up. This isn't rocket science. Sometimes the hardest part is just waiting for the move to happen. It's easy to see on the high time frames, but actually waiting, sitting on your money, not over trading, and then waiting for that move before getting in is the hardest thing. That's discipline. That's trading psychology. This is why a lot of people say, a lot of traders, high win rate traders say that psychology is number one in trading for trading success. Okay, so we look at this move as being the breakout. Now, you can call it the first bullish move of Ethereum's bull cycle, the new one. But you can also say it's not. You can also say, just like Bitcoin, you've broken out of a high time frame resistance, and all you're doing now is waiting for the retest before the actual breakout. I am on that side. Either way, you still have to come down and retest. Whether you think this is pure impulse or you think it is a corrective breakout, it doesn't matter. It's going to have to come back down to retest. I talked about this a few videos ago, and I said, looking at this, there's so many reasons you can tell it's not a pure Elliott wave impulse, 5 waves up, 3 waves down, and then you continue after you retrace to a minimum of 382, maximum of 618. It's not that. How do we know that? Okay, this is the key. So let's say you assume that this is pure impulse. You take your Fibonacci retracement tool, and if you're in a purely impulsive move, what do you expect? A minimum retracement of 0.382. That is the rule. Okay, there are guidelines and then there are rules. That is a rule. There are very few rules in trading. One of the rules in Elliott wave analysis is that a minimum retracement for wave 1 comes down to the 0.382. That would be wave 1 because it's the first wave out, right? So that's unquestionable. That's incontrovertible. But you can see that the 0.382 hasn't been hit. It cannot be pure impulse. Another reason it can't be pure impulse, it's off in the time component. What does that mean? If you look at the time it takes to come up, right? You count all these candles. It's like 1, 2, 3, 4, 5, 6, 7 daily candles. In a wave 1, the time up is equal more or less to the time down. You can see that it's taken way more than 7 candles here in this retracement. So it can't be a wave 1. So having probabilistically taken wave 1 off of the table, what is this likely to be? It's likely to be an ABC flat correction, where you're seeing an ABC flat correction down. So this is what you're likely seeing on the Ethereum chart right now. ABC, ABC, very high probability read. And let's say you're wrong and this is indeed pure impulse. What you're going to see is, at the very least, or sorry, let's say this is a zigzag and not, this is corrective, right? Let's say it's a zigzag and not a flat correction. Then you're going to see a retracement to the 0.618. If it is indeed a flat correction, you're going to see a retracement to the 786. In either case, Ethereum comes down to a minimum of 2,742, which is a drawdown of 17%, 18%, or a maximum of around 22, 23%, which is where your 786 is, okay? And for the longest time, when people were confused why Ethereum wasn't moving, well, it's simple because it's an ABC correction, and this B wave is capped by this A wave. Okay, of course, it can run up a little bit, but it can't really break this corrective pattern until it draws down impulsively. So that impulsive drawdown is both going to retest the tops of this 3+ month accumulation channel, and it's going to complete this corrective breakout and retest to get you into the bull market. So if I'm in Ethereum, so if I'm trading Ethereum, I'm waiting for that. Okay, I'm expecting a move down 19 to 23%, and I understand that Bitcoin's probably coming down a lot more. Most altcoins are coming down, not most altcoins, some altcoins are coming down a lot more. So this is going to be one of the first out of the gates because the declension is so minimal as compared to others. So that's what I see in Ethereum. Honestly, I don't think that that's the hardest read. It's one of the easier, more straightforward reads in the market right now. I think most people can make this. Some people are going to be tricked in thinking that this right here is going like this. So you're going to see some people get in here and thinking this is support. But what you're likely going to see here is a breakdown at this level, continuing down here as Bitcoin breaks down. And I think I said this before. So when I saw Bitcoin's chart and where it's at and where it's likely heading, for a few reasons, I see it happening in 3 waves here. All right, I see it coming down in a zigzag, corrective zigzag. So 1, 2, 3. That first move down is going to find some support. In that move down, which should be only a 15-16% move, I think some altcoins like Ethereum, like Hook protocol, like any altcoins that's really close to support, they're going to run and start their bull market in earnest at this point. Others like Cardano, like Polkadot, like XRP that have further to go are going to require all of this before coming to rest. Does that make sense? So you're going to see a first wave of purely impulsive price action. And when I say purely impulsive price action, you'll understand the difference when it happens. You're going to be like, oh, Dean, I know what you're talking about. Like, I did 30% in an hour, 40% in an hour, not in a day. I did 100% in an hour, 50% in 15 minutes. That's the bull market, impulsive price action that I'm talking about that you can expect. So that's what I'm seeing. I hope that was helpful. I hope that was useful. That was Ethereum. And like I said, with the portfolio analysis consultation, I'm basically doing that for all your assets, but in addition, also looking at your entire portfolio, seeing if you're overly invested in, too many assets or too few, or what to do about that, all that stuff. So it's a comprehensive offering that I'm now making available on my Buy Me a Coffee website because we're going into the bull market and I'm getting more requests in that way. So there you go. All right, everyone, take care. Hope that was helpful. Hope that was useful. Like, share, and subscribe. Consider buying me a coffee at the link below, and I'll see you next time. Bye.
All is well.